Peter, how would you describe the operating environment right now?
Hello, Ricardo. Well, the operating environment for banks is tough at the moment. We're seeing lower interest rates. We're obviously dealing with COVID-19 and certainly seeing less demand from customers for lending.
So COVID-19 has forced global interest rates to nearly zero, including here. To what extent will that hit the business, especially given margins were already being squeezed before the outbreak?
Well, COVID-19 is having a number of impacts on the business, Ricardo. Firstly, on net interest margins, we're seeing lower interest rates will effectively flow through into the margins over time because they impact our lending rates, our deposit rates, and also the rate we earn on capital. It's also having a big impact on our impairment charges, which are up nearly fivefold this half.
So how do you explain to your shareholders your move to defer a decision on dividends?
Ricardo, the board took account of a number of factors in considering the decision to defer the dividend. In particular, APRA's guidance that the prudent course of action at the moment is defer a decision. So the board accepted that piece and decided that we would defer the decision at this point.
Should shareholders prepare for lower dividends in the future becoming the new normal?
Well, I think banks are very linked to economic performance. So banks in particular do well when the economy is doing well. When there are hiccups in the economy, such as what we're having at the moment, then it's a bit tougher. How that pans out over time will tell. But the important thing at the moment is we have strengthened the balance sheet. We've got good capital levels and very strong liquidity and funding levels. And that sets us up well to support the economy through the period ahead. And in the long run, that'll be good for shareholders.
And you're also looking to simplify the business. How are you doing that?
So one of our announcements today is that we will create a specialist division that will house a number of businesses, including superannuation, wealth platforms and auto finance. And that allows our banking businesses, our banking executives to focus on the banking businesses. Over time, we see this as a simpler model for the bank that will deliver better returns.
Now, you are seeing tens of thousands of loan deferrals at the bank. To what extent are you expecting both businesses and home loan borrowers to potentially default on those loans down the track?
Well, it's still early days in terms of the actual performance of the credit portfolio. The level of stressed assets was up a little bit, so we haven't seen a lot of stress in the numbers for March. But you're right, we have had over 100,000 customers ask for packages which defer repayments on loans. And so why that's important is that allows those customers hopefully to navigate this period where we've got strict social distancing requirements and maximises the number of customers that can go back into business or go back to work over time. I think in 3 to 6 months' time we'll have a better view on how effective the government stimulus, and the government's done a great job there, the banks and what the Reserve Bank have done.
It seems like early days, but in the media conference you said we are in the middle of a once-in-a-lifetime event. An optimist, right, would look at that statement as we must be over the worst of it if we're at the middle. What do you see?
Well, I think at this point the government and all the governments, the federal government, the state governments, are being very clear on how they see the management of COVID, and it's heading in the right direction. But one of the other points I made on the call today was, unlike historical recessions when often you can't see a way out and the economy needs to be restarted often by the government, what we see is that as social distancing rules are moderated, that economic activity will come back. And so that is a light at the end of the tunnel, if you like, that we can see activity coming back. Now, it may not come back in all cases, but we see that as a positive.
So how do you see the economy coming out of this, and what type of recovery are you forecasting?
Well, our economist, Bill Evans, unemployment's probably the best way to look at the economy just at the moment. We think unemployment of around 9% in the June quarter, coming back to 7% by the end of the year. But importantly, without the JobKeeper package from the federal government, we could have seen unemployment levels at 17% in June. So the actions by the government and the banks and the Reserve Bank are very important in helping the economy get through this social distancing period.
And just finally, have you personally downloaded the COVID Safe app? And what are you telling your staff? Are they being encouraged to download the app to work on site?
So Ricardo, I have downloaded the COVID Safe app, and we are encouraging all our staff members to download it because we think that is an important part of managing COVID.